Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, March 19th, and my name is Raleigh White, and I'm coming to you live from a beautiful sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, beginning with his midday market analysis and his updated stock watch list. Then he's going to talk about seasonality. He's going to share with us what seasonality is and how it is applied to stocks. He's going to talk about the tools that he uses for measuring seasonality and why seasonality can be very, very effective when used as a tailwind when looking at a stock. He's also going to share how he applies technicals to seasonality and looks to ensure that price is not overextended. He's also then going to talk about how you can confirm a trend and selecting the right options. And finally, folks, he's going to share with you his favorite way to trade earnings using time spreads. Time spreads are otherwise known as calendar spreads. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, I've opened the chat room to everyone and we do have some ground rules. Always make sure that you are kind and supportive in your posts. Wherever possible, please keep to the topic, folks. No political discussions allowed whatsoever, and keep those side conversations between one or two of you to a minimum, because all it does is interfere with the rest of us that are trying to focus on the education and the information that Roger's going to be sharing. Because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock for Roger's pre-market must-watch show, you'll note that there were several catalysts on tap that we needed to be aware of. In the chip sector, we noted that Micron was down 5%, SanDisk was down 5%, and Western Digital was down 2%. On the tech front, we noted that Accenture was getting ready to release their earnings before market open. On the consumer front, we have Carnival Cruise Line coming in up 1%, and Dryden was getting ready to release their earnings before market opened. On the basic materials front, we noted that Newmont Mining was down 6%. And then on the international front, Euro stocks were down 1.6%, the Shanghai was down 1.4%, and the Japanese Nikkei was down negative 3.9%, giving us no positive tailwind coming from the international markets. As far as the Fed is concerned, there were several reports scheduled for today, including jobless count claims, Philly Fed manufacturing data, new home sales data, business inventory, and wholesale inventory data. Now, for those of you that are wondering, Raleigh, what are these catalysts all about? Why should I even pay attention to them? Well, from Roger's perspective, he believes that information that's either known or will become known during today's trading session, but may not yet be priced into the market, that represents a volatility flashpoint. And we need to be aware of that. For example, if you're sizing up a potential opportunity in chips sector, it might be helpful to know that the key players there are down coming into the open, and that's why we pay attention to them. As far as Roger's pre-market stock watch list is concerned, you can see that he shared 18 tickers with us, the bulk of them to the short side. Now, you'll notice that a couple of these tickers have underscores, MMYT to the short side and FSLY to the long side. The reason I do that is that when Roger is talking about those tickers, anytime he says something like, I really like the way this is setting up, then I underscore that and bring that to your attention. And in both cases, he said that with these two stocks. Now, I do need to clear about something else. This is a watch list. What that means is that from Roger's perspective, these are tickers that have the potential to be trades that he might take if they meet his requirements. But they're setting up as possible trades that he could take. Therefore, it is a watch list. And you're here with us today. We're at the midday, and Roger is basically going to go ahead and open this up for us. Let's see here. Let me check something out. Excuse me for a minute. I need to reclaim host. And there was just a comment that was just posted in the chat that I've just deleted. Folks, we do not like it when you pose links here. Do not copy and paste any links into our chat. We can't verify those links. We don't want any spammy, scammy stuff. So anytime you post a link, I'm going to delete it. In any event, we were talking about the watch list, and this is going to be updated here in a few minutes when Roger joins us. Now, as far as his pre-open thoughts are concerned, the futures indexes were all moving lower coming into the open, not significantly, but they were moving lower. We noticed that the put to call ratio was significantly unbalanced with puts in firm control. And from Roger's perspective, he says, hey, we're heavy on the put side. We're about to have a reversal then, and he expects call buyers to start coming into the markets. As far as the VIX was concerned, the VIX was moving higher, and it was closing above the 27 level. When looking at the SPY, the QQQ, the RSP, the IWM, everything was down in the range below major support. As far as the stocks were concerned, the number of stocks making 20, you know, basically making 20-day lows, was significant and growing. And that's something that Roger looks for momentum. And as far as the SPY and the NQ100 concerned, both of them were in bear territory. What do we mean by that? The number of stocks below 50% on a 200-day moving average, it was below 50%. And from Roger's perspective, technically, that means we've been in bear territory. And we were there a couple of times earlier this week. It tends to vacillate, but if we add that in addition to the momentum level, once again, negative momentum. But so how does Roger feel about things? Well, this morning he basically said, folks, as a technical analyst, the markets basically look overextended to the downside. And he expects that momentum is close to a bounce. Once again, his experience, and he shared with us going past over the last 5-10 years, what happens when this occurs, we technically do tend to see a bounce. From his perspective, he says, guys, it's the markets want to move higher. It's kind of like a balloon, and we're holding the string down. And what's the driver of that? Well, the war and the VIX and crude oil pricing are definitely weighing heavy on the markets. So, with that, folks, it's great to see you here. We have an awesome crowd, and Roger's put together a tremendous agenda for us today. And I like the timing of the things that he's going to be talking about. He's going to begin by giving us a midday market analysis and his updated stock watch list for today. And then he's going to talk about seasonality. He's going to talk about what it is and how it applies to stocks. He's going to share the tools that he uses for measuring seasonality and and how seasonality can be used as a tailwind. He's going to talk then about how he applies technicals to seasonality. He's going to then, and this is obviously important to Roger, anybody trading, just to make sure when things look good, let's ensure that pricing is not overextended. He's then going to share how he likes to confirm a trend, selecting the right options. And one of the big treats here, he's going to share with us his favorite way to trade earnings using time spreads. Time spreads are often also referred to as calendar spreads. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, I've opened the chat window to everyone and we have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. And folks, keep those side conversations to a minimum between a few of you. All it does is interfere with the rest of us that are trying to focus on the information and knowledge that Roger's sharing, because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to the team. Good morning, everyone. Good morning. Matt, good to see you. Roger, good to see you. Whew, what a day, brother. I mean, it's just another day in semi-paradise, right? Nice job, by the way, on that pit trade that you did on WDC. That was excellent.
Thank you. Appreciate that. It's not easy market conditions right now,
No.
you know?
No, and
It's
that just tells me when you see something like that, it's got to, despite everything else, it meets your requirements. And I keep on saying that, and for people that don't know you, they probably don't know what I'm talking about. For people that do know you, we know exactly what you like to see, Roger, when you're
Yes.
considering entering a trade. And Matt's the same way. This is a tough market to trade. Matt, I don't know if you've seen anything, trading the SPY this morning, but things have just been choppy. The internals have been
Yeah.
weird.
Yeah, this market is very, 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 very. I mean,
It doesn't know what it wants to do.
Yeah, exactly. Thank you, thank you for saying that. Thanks for taking the words out of my mouth. But you're absolutely right. It just doesn't know what the hell it wants to do. It, it to me, the market feels like it doesn't want to go lower, but it will go lower if there's more bad news, but it doesn't want to go lower. And the truth of the matter is most of the time the market doesn't want to go lower. It feels very, very bottom heavy. Like right here, let me just show you real quick. By the way, can I ask you folks, for those that get emails and SMS alerts regularly every day, did you guys get your alerts today? The folks that get them regularly, because the room is really light today. Maybe there's like a webinar or something. Okay, cool.
Yeah, we just want to just make sure that you got invitations to join us, folks.
Okay, all right. Yeah, I know some of you for whatever reason don't get them. Whatever, I get that too. But for those that do get them, I wanted to make sure.
Yeah.
Okay, perfect, perfect, perfect. Well, I appreciate that. Thank you for letting me know. I appreciate that. I'm gonna go ahead and close the chat. Otherwise, I'm gonna get in trouble. So no, I'm not going to get in trouble, but I get in trouble with myself because then it breaks my train of thought, and
It's easy to
yeah,
get distracted, folks. And
yeah,
and from that
exactly.
stand, and just to let people know, I am monitoring the chat for Roger. And if I can't answer your questions, I'll collect them here and I'll feed them to Roger periodically. But it allows him to focus and things run really smooth.
Yeah, and trust me, it's for everybody's. It's in everybody's best interest uh, that I focus right. That I focus on this. Okay, so let me go ahead and share my screen real quick. Um, Let me do that. And for those of you who are just coming in here right now, good morning, good afternoon. I hope everything is good. Hope you guys took a nice profit. What program was it in, Matt? That we had the Netflix short? I know, no, I know. What program was it?
Stealth Surge.
Stealth Surge. Yeah. Yeah, I don't really track. I don't track. I know what stocks we have. I don't know what programs they're in. You know what I'm saying? I just know what we have. Matt allocates them per program, but I know all the stocks we have. Um, okay. All right. All right. So, nice breakdown here. Okay. So let me just kind of show you what I'm looking at. And folks, you know, one thing about me, I get very, I'm not one of those all over the place kind of guys. I'm very specific, focused on specifics. And I'm going to tell you something right now. And this is not just me. Any institutional trader will tell you right now. The single biggest important factor right now is to have this bar right here get above the 200-day moving average. Okay? And right here, getting above this level right here would be a great start. 659.57 area would be a great start. As a matter of fact, I usually don't post things while I'm live here, but I'm gonna post this one because it's such a crucial level for us right now. This area right here. I'm right here. This area right there. Here, let me just post this really quickly in the Telegram channel for everybody, because a lot of people are really focused on the market right now and are fearful. We need to break above 659.57 today to go higher. Otherwise, we are stuck below the 200-day line. Okay? That's all. That's the only posting I'm going to do. And what I just posted in Telegram is really important, because look where the 200-day line is. See that? See where we are right now? See where we're wicking out? I want price to say, no, 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 no. We can go back up there, test this area again, and stay here. It's really important. And if it doesn't happen today, tomorrow as well. Tomorrow's Friday, yeah. And it's tomorrow's we have triple witching. That'll be a very important, very, very important piece of the puzzle. But all the indexes, SMH. If you look at SMH right now, it's kind of stuck here between. If you look at QQQ, we broke the 200 on that. If you look at RSP, we're kind of stuck in this range. If you look at mega caps, and this is really negative, we broke this low right here. So none of this is positive. Now, what are the pleasantries? Well, let me show you something here. The number of stocks making 20-day breakdowns is over 500 right now. It was actually at 591, I think, a few minutes ago. Coming in today, it was at 514. Now it's at 537, and earlier it was at like 590. I think I posted it for you guys too. I post a lot of here it is. 591. 591 when I posted it for you at 11 a.m. an hour ago. Okay, an hour ago. So this market has absolutely no idea what it wants to do. Yeah, it has no idea what it wants to do right now. And one of the reasons why we haven't been putting in too many trades is because of that reason. Because remember, we are victims of the market. The market, we are trying to gain an edge on the market. We are not trying to guess where the market's going to go. We're not trying to jump ahead. We're just remember, the market is that big shark, and we're trying to just get on the tail of that shark and just ride it and ride it and ride it. But this market does not know what it wants to do right now. I'm going to tell you that right now. And the biggest thing is this 200-day moving average right here. Very, 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 very important. Extremely important. Okay. Okay. Now, the market really does not know what it wants to do. It has absolutely no directional bias whatsoever since the moment it opened. All we've been doing is scalping. As a result, as you saw, we took a couple of points on WDC. We took profit on Netflix. But there's just not much going on right now. There's just not much going on. Now, let me go ahead and give you stocks that I'm looking at. I have a really good educational presentation for you today. When I say presentation, I mean me teaching you. So short side first, okay? Sophie, bank stock. We need to focus on this side. This is daily. This is once we like it, then we look here. But to see if we like it, we look here. You could see right here, it's got a nice channel right here that it's breaking down of. Still very close to the 8-day. Volume has been high the last few days. As a matter of fact, we have a high volume bearish candle here day before yesterday. Volume is actually picking up to the downside, and it's a financial. And it's a second-tier financial. It's not a first-tier financial. Meaning it's not JP Morgan. It's not Citibank. I think you guys understand what I mean by that. All right. Okay. Mattel, same pattern. Here's what I like, and I've been seeing these patterns a lot lately, and I really like them. You break down, you start filling in the gap, but you don't really make it very far. And by the way, it works exactly the same way to the upside. You get a gap up, and then it starts doing a round, building a foundation, and then it breaks out. So you could see right here, broke down. It only filled halfway. It's still below the 200-day moving average. It literally just went to the 8-day EMA, and then it's just been coming down to 8-day EMA. That's a very nice look. That's a very nice look. That's actually a beautiful stock, right? I mean, that's very nice price action. Very consistent, not choppy. Look, even when it backs up, it's smooth. You could see it here. I know that to a lot of you, you may be like, why is he getting so excited? These are the things that get me hot and bothered, you know? I look at a lot of stock charts every day, folks, as you can imagine. Bank of America. Now, this is a first-tier bank, but also breaking down. First time today. What a shitty market. Sorry. What a shitty market.
I
Not
say, hey,
wrong.
Roger, you're on the fence, buddy.
Yeah, yeah. One thing about me, I don't. Uh, I'm going to tell you how it is. I'm not going to play games. Um, and I think you know what, Raleigh. I think one of the biggest reasons why people listen to me is because of that. Because they
Yeah.
know they're not going to get some marketing BS with me. They're going to get the truth, whether they want to
Well,
hear it or
yeah,
not.
and and your positions are so heavily fact-based, Roger. You know,
Yeah, that's true too. Yeah,
it's
I don't
not
really
based
have.
on belief systems, it's
No,
based
no,
on
no,
what's
no.
happening.
Right.
Yeah.
Yeah, yeah. Because the only thing that matters is what's happening right now.
Hmm.
So you could see right here. You see this? How we breaking down, but we were not overextended. That's a very nice look. Okay. I'm circling it. I added it to my watch list, and now I'm circling it. Now there's been a lot of talk about Nike this morning. I think it was me and Richie. I think Richie and I were talking about this morning. We look at so many stocks. I get confused. But yeah, nice look on Nike. You know what I was telling Richie? I said I think you got out of it a little too early. I think that's what I said. I think because I still like it. It looks really good here. You're still in it. Okay. Good. Yeah, yeah. Again, it might. I get confused, man. I talk to so many people about so many stocks. But I remember telling somebody who got out of this that they should have stayed in it. That's what I remember telling them. Um, Upstart. Let's see. Yeah, you see that? That's nice. Very nice trending stock. Broke down. Now, I would like to get some confirmation because I don't know if we're going to stay below the 200. I would assume, I'm saying the word assume, that if we bounce back hard, these stocks are going to come back into this channel. But even if they do, you're still you're still in a good spot. You're not in a bad spot. You end up being right here, which is not too bad. Okay. Um, Next one, SC. Now, people know I've been a big fan of this company, both up and down. It trades very well, even though it's an ADR. I think they're an e-commerce site in Asia, but not China. Nice break. You got this. You got this here though, but that's 5 points away. Singapore, thank you. Singapore, yes,
Singapore. Yeah.
Singapore, exactly. And then CSGP, my last one. Are you noticing something interesting about every stock that I picked today, folks? Let's see if you notice. If let's see if you notice. Let's see if you notice a pattern. Okay.
So you're getting comments like went down before the war, they're breaking lower, they're rolling over, A line to the downside, below the
Ev-
A line.
Everyone, everyone, all of those things are obvious to me at least. But yes, you're all right on all of them. None of these are A lines to the downside. They're all breakdowns. None of these are A lines.
Hmm.
Uh, if they were A lines, then they would be like right here, not down here. They are completed A lines. No, the one thing consistent about all of these, and let's see if somebody says this, they are all compression breakdowns. They are all compression breakdowns. The lowest risk opportunities occur when markets are expanding from a compression.
Hmm.
They're not that far off. They're still near the 8-day EMA. Now, notice how all of them are near the 8-day EMA. Remember that because we're gonna do a full circle and come back to that in a few minutes. Okay, that's going to be part of our education today. Okay, because look, if we're wrong, it'll come back into the channel here. And remember, the best breakouts occur after consolidations, breaking down. So take a look at my stocks. Okay, see how close they are to the box.
Yeah.
See, they just started. Look how close they are to the 8-day. Um, look here. One second. Sorry about that. Okay.
And Roger's talking about his short list, guys, and his
This is
question
my
was, what do all of these have in common? By the way, I'll post that short list in a moment when Roger gives me his longs, for those
so
of you
look
that may have missed it. Yep.
look at Upwork, right? Look at Upstart. Don't you see they're all breaking out of a compression? They're all below this compression, but they're not down here. They're just down here. So if we're wrong, you don't understand the value of what I'm teaching you right now, folks. Look at how close they are to the 8-day EMA, but they have at the same time broken down. You can negate this trade very fast if it comes up on the other side of this channel. You understand that, right? The faster you can negate a trade, the better your risk to reward will be. If you can get breakdown from a compression, that's very low risk, high reward opportunity. Okay. Every one of these stocks have a breakdown from a compression.
So a quick question came up here, Roger, wondering that on looking at a trade like this, do you look for a pullback to the VWAP before the entry, or or once
We're we're
again, just the
we're
fact that it's breaking out of the compression is good?
we're not talking about our entry. We're talking about finding good stocks right now.
Aha, good
VWAPs are
point.
over here. We have to
Yep, yep.
first make sure the stock is good. Remember, we have to make sure that the nightclub we're going into actually is going to be open after midnight serving us drinks, okay, before we get into the VWAP. We need to find the good stocks. We need to find low risk, high reward opportunities. The best opportunities come with compression breakdowns or breakouts in the direction of the trend, obviously. And you don't have a lot of them to the upside right now. But do you guys understand what I'm doing? Look at every stock on my watch list. I want you to
Mhm.
see this. Before you talk about VWAPs, you have to apply the VWAP to something. That's what we're talking about. Don't jump the line. Otherwise, if you jump the line, you'll find the perfect VWAP stock that doesn't look good on a daily chart. And then where does that put you? In the doghouse. So look at the stocks that I'm picking. Look at SoFi. Okay. This is the channel. This is outside of the channel. Look at Mattel. Look at BAC. Look at Upwork. That's like the most beautiful example right there.
Hmm.
That's beautiful right there. Look at Nike. Do you see something do you see something in common with every stock that's on my watch list?
Hmm.
It only took me 20 years to figure this out. It took me only 2 months to figure the VWAP out, but it took me 20 years to figure this out. CSGP. Do you see that? And the fact that they're going lower is absolutely nothing to do with what I'm trying to explain to you today.
Hmm. All right, let's see what the longs are looking like, Raj.
All right. All right. Dell. They don't look like that, okay? That's an A line. A sloppy one, but that's an A line. Sienna. Nice. Nice look. Real nice look. I can't be as choosy with my shorts, with my longs, because there's just not that many longs at all. There's hardly any longs. But this would have been, or this right here would have been the perfect opportunity. KR. A line to the upside. Tigo. Not really ready yet. Needs to kind of get up here. Okay. Whole X. That's a nice A line right there. Let's see if it's ready. Yep, right here. Okay. See, those stocks I was just showing you, they were all here, not here, to the downside. Okay. DAR. That's actually a really nice look. Oh, earnings in 5 days. That's a really nice look, actually, right there. Nice look. That was on my watch list this morning, and Richie also, he and I were talking about. Here, now, this is interesting. This is Taiwan Semiconductor. It's overextended. Now let's talk about VWAPs. Stock is overextended. Is it at the VWAP? Nope. But we have to recognize where it is in the food chain. Is it here? Is it here? Is it here? Only because it's here on high volume, I would be looking at the VWAP. I would love a pullback to the VWAP right now. Okay. Tower, sorry, not Taiwan Semiconductor. Tower. Okay. WDC, I still like the stock. We did a little scalp in the pit today. Still like the stock. I still may engage with this stock. Okay. Okay. One second. Let me just mute something here. It's driving me nuts. And it's not a far road. Okay. So those are all the stocks, but I wanted you to see the stocks on my short list because there are so many stocks on the short list right now that it's easy to find really, really high probability trades. And every one of those trades that I showed you happens to be a very, very low risk, high probability trade. Why? The question is why? Because they're all close to the 8-day EMA. Now, I'm going to do something very nice for you today, something that you're not expecting me to do.
Roger, quick question on,
yeah, go ahead.
Before you move on from that, there was a couple of questions. When you were drawing the compression boxes, several people were going like, Roger, how are you drawing that? I mean, are you looking at levels or are you just eyeballing, price clusters?
I'm eyeballing price clusters consistently over X amount of days. And I want to see like 5, 6, 7, 8 days within the same high and lows.
So folks, just, you can clearly see with your eyes that the market is moving sideways. And then Roger just basically draws a box, covering that range. And that's the compression channel. And then also real quickly, Roger, people
I'm
were
not
wondering if you could explain kind of quickly, what are the 3 charts that you're looking at? You have the daily, you have the intraday, and what's that chart below?
That's just a 2-minute. Those are the Hakanachi candles. Those are just I just play around with those or look for confirmations when I'm looking at swing trades and day trades.
Okay.
But honestly, my eyes are at such a point right now where I'm wrong on those 1 in 100. Even basically, if I don't look at it, I'll be wrong maybe 1 in 100, maybe 150 even. I'm not wrong. You get a feel for these things with time. You look at something for 8 hours every day, you start getting a feel for it. And by the way, folks, there is a very, very strong correlation. Just so you all know, there's a very strong correlation between how long you've been trading and whether you're successful or not. Now, a lot of people don't understand what that means. If you opened up your brokerage account 6 years ago, traded for 6 months, and then didn't do anything for the next 6 months, that doesn't count, okay? I'm talking about people who continuously trade every day. They found out that the majority of, not majority, every person, basically this is what it looks like. There's a period. If you can overcome that period, it's like 3 years. If you could trade for 3 years consistently, the odds of you making it as a trader are very good. It's like a business. If you have a business and your business has been open for less than X amount of time, your odds of busting out is like 90%. And if not, then your odds are like drastically reduced. It's the same kind of thing. So what they found out was 3, 4, 5 years, your odds are actually really good if you can trade consistently that much amount of time and not give up. And then they found out if you've been trading for 9 to 10 years, then you're actually in that 2% or 3% category of traders that will be profitable consistently. So time, what I'm trying to say is this: you do get better with time. You do get better with time. It's like playing a musical instrument. You get better with time. Now, for some people, it's faster. For some people, it's slower. Now, here's the thing. I'm trying to take that 10-year and move it into 6 months to a year for you. Okay? Because because um because I think that a lot of the things because I think um a lot of the things are things that are very preventable, not just a little preventable, um um but but really really preventable, really preventable. Okay. So I want to go over some things with you. We're talking swing trading right now. What are the perfect ingredients to a swing trade? Let's talk about that for a few minutes, okay? Let's just pretend we don't know anything about the markets, okay? All right. Let me see something here. All right. Um, let's just call this something, okay? Okay, what's the ingredients to the perfect trade? Now, Raleigh, I'm not going to open up the chat because if I do, I'm going to end up being here for 3 hours, and I'm going to piss everybody off. So and get distracted. So I don't want to do that. So you're going to have to be the moderator around here,
I'm glad to do that.
folks. What's the first ingredient of a trend? What are some ingredients? Raleigh, do you want to just read off what people are telling you?
Okay.
Come
So
on,
what's
folks. What swing trade? Swing trade. What's the
for
per?
swing trading?
Think basic. Don't think complicated here. What do we need?
Trend, pattern,
Ah, people must be because that's what I was just about to write. We need a good trend, a good quality trend, right? Okay.
yep.
What's the second thing we need?
We have direction.
Well, that's trend.
Okay. Let me
What's
see. Tight buy and sell difference,
yeah,
volume,
liquidity,
volume, volume,
liquidity,
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 and volume.
here, how about this? Liquidity, a little interactive play here. Go ahead.
Strength, uh,
Yes. Strength.
timing,
Uh,
smooth price action, not gappy.
smooth price action. What was the other one? Strength. What was before smooth price
Timing.
action? Okay, timing. Okay, all right. What else do we need?
Let me see. Several people have said seasonality,
Ah, seasonality. Yes. Next thing.
identifiable, support levels.
How about not overextended? Not
Okay.
overextended from
Okay.
base. How about that? Wouldn't that, right? Because by close to, right, saying the same thing.
Hmm.
Okay. How about what else?
Let me see. Pullbacks was listed
Well,
here.
that's timing. That's timing.
Okay, would be timing, smooth
Timing.
price action.
Yeah, we got smooth price action.
All right, let me see. Got some new stuff coming in here. Above the VWAP,
No, it has
uh,
nothing to do with above
relative
VWAP.
strength compared to others.
Well, that's right here. Strength.
Okay, ADX.
That's strength trend. We got all
Yeah,
that.
okay,
And
higher
smooth
highs,
price
higher
action.
lows.
We got all that.
All
I
right,
said think basic. This is basic. This is basic. You're missing one important thing. Or two, actually two important things.
sector.
Nope. No earnings. And
Earnings,
and then finally, what's the next thing? The last thing. Come on, guys. It's as simple.
volume.
We already have that.
Okay, I'm just reading what's here. Let's see.
Yeah, yeah.
News.
No, we don't want news. We want no earnings, no
I
or
guess no
news.
news would be what we're looking
Yeah,
for.
no news. Yeah, no
Implied
earnings or news.
volatility.
Wait. Someone
Catalyst.
said implied. Wait.
Implied volatility. Yep.
What does that have to do with? When we use the word implied volatility, what are we talking about?
Risk.
How about options?
Yeah. Options.
How
Yeah.
about options? Implied volatility, options? How
Yeah.
about options? The options have to be good, right?
Yeah. Options need to be good. Yes.
Okay. So
Let's see if there was anything else.
I
It was
I think
good stuff came in here.
right, but I think we've covered everything. I told you I was going to have a good session for you guys today. So we need to have a trend. We need to have liquidity volume. We need to have strength. We need to have smooth price action. We need to have timing. We need to have seasonality. We need to have not overextended from its base, no earnings, and we have to have options, right? I mean, wouldn't you agree that if we have all this, we have the perfect ingredient of a perfect trade? Would I don't know what you guys are saying, but would you agree that
hmm
okay? Hey Matt, would you share the screen and whip out data miner?
Sure.
Okay, good. All right.
And thanks, guys. I mean, I'm not sure if I missed some of your feedback, folks. They came at me like a machine gun
No,
in the
it's
chat panel,
okay.
but we got everything covered, folks.
Yes. So let's kind of go through this, right? So Matt, so remember, I don't know if you. I'll tell you what I'll do. I'm going to do something right now. I'm going to take this document that we just made. Oh, Deanna wanted to tell me something here. Okay. All right. So Matt is showing his data miner. So here's what I'm going to do. I'm going to take the chat, open it for one quick second, and I'm going to post this document that we just made, and I'm going to give it to you. And Matt is going to take it and post it on the YouTube channel for everybody right now. Right, Matt? Matt?
Yeah. Sorry, I said yep. The mic didn't
I
pick it
didn't
up.
hear you. Yeah, I didn't hear you. All right, Matt. So go ahead and take us through it. Okay. So we want to find a stock with a clear. So why don't you put a stock in there like Dell or Sienna? How about that? This is Data Miner. This is a software we have. Now, this used to be a software that we used just for helping us find seasonality. And then we went off the reservation and made it into a data miner. Okay. So let's say I want to make sure the trend is good. Wouldn't I be looking to see if it's making how close is the stock to a 50-day high, 90-day high, and the ADX is above 20? Oh, are you telling me that it's telling me that we have good? So hold on. Trend, ADX, and 90-day high low. Did this data miner's telling me right now that we're right making a 90-day high and a 50-day high, Matt?
Is
And is it also telling me what the ADX is?
strong.
Okay. What is it telling me about liquidity? No. 30-day average volume. Liquidity.
Oh yeah. Sorry, liquid.
It's liquid, right? Okay. And now let's go hit options on it real quick. Okay. Now watch. You see it says not overextended from base? One of our criterias. Man, it's sure calculating a long time. And it's analyzing market conditions and finding the right option for us. Okay, go down, Matt. So would this tell us if we were overextended, which is one of our conditions?
Yep.
What would it tell us? What would the message be if we were overextended, Matt?
No soup for you.
Would it actually say that?
It will.
I see. I see. Okay. So if it doesn't say no soup for you, does that mean that it's okay to take options?
If it gives you an option and everything
And
else works out, you're not
and
too
it's
close to your upper target.
so we know, but because data miner told us the trend is good, the quality of the trend is good, we have strong liquidity, and now this is telling us it's giving us the options. Wow. And Matt, is that also telling us the upper target, which means our profit target on this trade if we took it?
It is.
Wow. Isn't that amazing? Hmm. Now, Matt, can this program also tell me if seasonality is on our side or not?
Yep.
Can you check for us?
Can. Although it doesn't look like it loaded the first time. Let's do it again. Make sure. Might be having a technical difficulty.
Technical difficulty. What technical difficulty? Put in Sienna. I don't care. Put in another stock. Is there like an issue with data right now or something? Huh?
Definitely having a cloud problem.
Cloud. There's an issue in the cloud right now?
Yeah.
Yeah. Okay. All right. But basically, it'll also tell us the season. It'll give us the chart. Try a different one. Try like a 10-day or something like that, or clear the filter. I think Matt's having it on his. Huh. It's weird. We never had this before. But anyway, on the bottom, it gives you the seasonality. And does it also tell us when earnings were or when earnings are, Matt?
Yep.
Where does it do that?
Right there.
Sure. Aha. So, so you're telling me, you're telling me that this program, I'm going to go ahead and share my screen again, right? And then we're going to come back to you. Don't put it away too far. I'm going to show them time spreads, okay?
Okay.
Okay. Go ahead and unshare and I'll share again. Okay. So remember a minute ago, you guys gave me the criteria for the perfect trade. And that criteria included the trend, liquidity, the strength, the smooth price action, the timing, whether it's overextended or timing is whether it's overextended or not. That's right here. Same thing. The seasonality, earnings, and the option. And how about the profit target? And guess what? Did you guys just see? You didn't see, for some reason, it didn't do seasonality, which is the weirdest thing because that's the first thing we do it in there. But do you guys understand why we built data miner? To tell us the ingredient of a perfect trade using seasonality, using trend, using smooth price action, making sure it's not overextended, no news, no options, and no profit target. Matt, let me ask you another question. What if, um, what if we already have a stock? Let's say we have, what's the stock? We're looking at Dell, right? What if I'm also looking to make sure that the stock is not correlated to any other stock that I have? Wouldn't that be an important ingredient to finding the perfect trade?
Yep.
Can you show me if Dell is correlated to WDC? Because, chips, memory, right, Raleigh? I mean, very
Yep.
close, right? We're getting into a very
Strikes me that they would be correlated. Yep.
well, we'll see. Why don't we let Matt tell us? Go ahead, Matt. Survey says Hey, look at that.
Yeah.
Not very correlated.
Not that
Not that,
correlated.
right. Nice
That's
little
why I'm
Venn
saying you
diagram
got to
there.
learn.
Yep.
So you're telling me that this program we have a program, Matt, that you helped put together that tells us if a stock is in a strong trend, if isn't it, whether the quality of the trend is good, how far it's overextended. It does, and if it's overextended, it'll just say no soup for you. It won't give you the options, right?
Right.
It also tells you if the seasonality is good or bad, and it tells you how correlated you are to other positions
And profit targets.
and profit targets. Wow. Now let me ask you. Let me take over the screen again, real quick. Would you guys say that we qualified every one of these ingredients? Now, do you guys understand what Data Miner does? It tells you if a trend is good. It tells you if there's liquidity. It tells you if there's strength to the trend. It tells you if the price action is smooth. It tells you the seasonality, which is what we originally built it for this. Over the next 5 days and 10 days, and any time period that you manually put in for any stock, whether it's overextended or not, whether there's news pending, it gives you the best option. It gives you the profit target, and it even tells you if a stock is uncorrelated to another stock. Now, Raleigh, I don't know about you, but wouldn't you say we covered all our bases there?
I think so too. And it would be nice if it would recommend on a daily basis the top stocks on a seasonality
And it does
point of
that
view.
too. And it does that too. It
Of
gives you the
course.
top here. What if it also gave you top seasonality on the highest performing stocks for any day of the year?
Mhm.
Top and bottom stocks, 5-day and 10-day seasonality windows with a one click of windows with a click of a button. Wouldn't it be great if it could do all that? If you guys
Oh,
could find a software that could do all that?
yeah. And then there's that whole
We, we're,
other
we're
element that you're going to get
so
to, Roger,
so I don't
on
know
earnings.
what's the
Yeah.
feedback, Raleigh, so far? Is the feedback
Fantastic. I mean,
so people keep asking me, well, what does it do? What does it do? Forget about what it does. Think about what you need to happen to find the ingredients to the perfect trade. This is what you need, right? And guess what? Data miner has that. But let's say you want to let's say you're a very frisky rascal like me, and you also like to trade earnings. Now, let me show you something interesting. I hope this session is useful to you. So let's take a look at Micron for all of you earnings traders out there. Now, what do I always tell you? What do I always tell you? Okay. What do I always tell you? If you trade earnings, you have to overcome 3 different challenges. Okay. See, most people think, oh, it's easy. All I have to do is just get the direction, the earnings right. Oh,
mhm.
no, 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 no. So let me show you this. This stock is down 4%. At one point, the stock was down 6%. Okay. They said that they're doing so good
I know.
that they can't keep up with demand. Hey, bank, I need to borrow money. Why do you need to borrow money? Because all the money that's coming in, we're spending on improving our company and making it bigger because we can't keep up with demand. I don't think there's a better thing a company can say. Okay. But the stock went down. So,
Yeah.
first of all, implied volatility was about was well actually, Matt, can you tell us what implied volatility on Micron was? Well, no, it's after the fact. Can you can it do that, Matt? Can it go back and tell us what it was, or it's telling us right now what it is?
Let me.
Because it's over already, right?
Yeah, I have
Yeah, it
this
can't
week
do it.
and next week. I don't
Yeah,
have
it can't
last
go.
week.
Yeah. It can't go back. Sorry, it can't go back. Okay. I really wish it can go back in time. So implied volatility was about 10%. So a move of 10% was already built into the options. Okay. Number one. Okay. So that means in order for you to make money on those options, the options have to move more than 10%. The stock only moved 4%. Okay. Now, the earnings were amazing. So, okay, great. You're going to make money because the stock is going up, right? No, the stock went down. So, in order to make money the traditional, the old fashioned way on earnings, you have to be right on the implied volatility. Here, let me write this down. So, let's see. Trading earnings. Okay. Let's just put a little distance here between them. All right, trading earnings. If you trade earnings the traditional way, buying call option or put option ahead of earnings, you have to overcome three major challenges. The move has to be higher than what's priced into the option ahead of the earnings, right? The earnings have to greatly outperform or underperform the reaction has to be just right. You've got to overcome three things, right? Three things. Let me show you a way to trade earnings where you don't have to overcome any of those three things. Let me show you something. What stock has earnings tonight? Can anybody tell us? A big stock that has earnings tonight. I'm sure 1 out of 388 people here can tell us. Anybody know? FedEx. Yes, FedEx. Thank you.
Yep.
Okay, FedEx. Okay. So let's take a look at something real quick. Let's look at the option chain. Implied volatility. Okay. So I want you guys to look at something. Okay. I want you to really pay attention to what I'm saying right now. I'm giving you a lot of red meat in this session, right, Raleigh? We're the gloves are
the gloves are off. Yeah.
I haven't opened up the chat one time. All right, so listen and listen good. So look at the implied volatility that's priced into these options. They're at 150%. Can anyone tell me what the implied volatility on these options is going to be in 3 days? Let me give you a little guess. This is the implied volatility. This is the implied volatility on earnings, on the earnings play that everybody's buying for tonight's earnings. All the degenerate gamblers are right here. Where is the implied volatility after earnings less? It's a third. Okay? Okay. Now, Matt, do me a favor right now. Can you pull up Data Miner? I'll give you the screen. Can you pull up Data Miner? Am I sharing right now? Yeah, I'm sharing.
Yeah, you're
Pull up
sharing.
Data Miner and pull up FedEx and tell me how often FedEx beats earnings expectations. Pull up the other feature we have in Data Miner, which is time spreads. Yeah, baby. All right. Ooh, it says signal strong. Can you tell us what that means, Matt?
76.5% of the time, it stays within the priced in range.
So you're telling me
24.5% of the time, it's outside of it.
So you're telling me let me make sure I understand this correctly. That implied volatility on options that for this week's earnings only make money in the best case scenario 24% of the time, and they're 3 times as expensive as options that are not expiring? Hmm. And even next week's options are 2 times cheaper implied volatility wise than this week's option, right?
Correct.
How do we know that, Matt?
Here. Next week IV
Oh,
versus this week.
oh, you mean Data Miner gives us that information?
Sure does.
So we don't even have to look for it. So what is it telling us about the implied volatility this week versus next week?
It's double.
Well, let's see. Show me. And people aren't, this week's implied volatility, next week's implied volatility, ratio of implied volatility, in case you can't read those 2 numbers next to it. And what does that say about the signal, Matt?
Strong.
Huh. So you're telling me this. Are you telling me that options implied volatility are twice as expensive this week as they are for next week?
That's correct.
And are you telling me that the options stay in range 75% of the time? Huh. No, 76% of the time. Let me ask you, Matt, where else can I find that information?
Good luck. That's what I can tell you.
You're telling me that I can't, if I want to see how often the move beats the implied move, I can't just look it up on my trading platform?
No.
Would you pay anyone here $5,000 in cash if they were able to give you that data? Would you say it's that important?
I would have paid them to find it.
You can't find that data anywhere, folks.
No.
You can't find that data anywhere. He's cracking up because you can't find that data.
Because I'm the
anywhere.
one that had to do it. Yeah.
He had to scrape that data. He can't find that data. The guy would probably write you a check for $100K if you could tell him where to find that damn data. Okay, so all right, Matt. So you're telling me 76% of the time FedEx stays in range, and this week's options are twice as expensive as next week's options? Oh. All right, Matt. So now that we all know this information, I'm going to unshare your screen, and I want to show folks. I want to open up America for some people here today. Okay, so let me share my screen again. Are you folks having a good time today? Mm-hmm. Learning something, maybe?
Yep.
Learning not to trade.
And they're getting a total kick out of Matt.
They do laugh sometimes.
He does. Okay, so Matt, what do you think about this play? These options, every degenerate gambler this side of Mississippi is going to be buying these options ahead of FedEx earnings. And we won't tell them that they only move 24% of the time. We'll just leave that out of the equation, okay? Why ruin the surprise for them? So what do you think about this? What if we, FedEx is at 346. Okay. What if we sell them this option that's grossly overpriced right now, and we buy this one right here? What would our debit be? What would our debit be? Our debit would be
like $1.90,
like less than $2, right?
Yeah.
So the degenerate gamblers are going to buy this option for $9, and their odds of winning is probably less than 20%. Watch this. You sell this option, you buy this option, you spend $2. FedEx doesn't go anywhere. Whoops, 1 second. FedEx doesn't go anywhere. Tomorrow is Friday. Oops. Matt, let me ask you a question. If FedEx stays below 347 tomorrow, how much is this option going to be worth?
0 by the end of the day.
0? You mean like nothing?
Yep.
Like, wow. And what about the option that we bought? How much do you think this was going to cost?
Still a lot of money.
Would you say it's going to cost probably about
be pretty similar.
$7, $6? I mean, it's got a week to go, right?
Probably more than that because it's only burning 1 day.
Well, let's just be pessimistic. Let's just say $7, okay?
Yep.
How much did you spend?
2.
And how much are you going to cash out at?
Well, you'd be getting 9 minus your 2, so 7.
Did you just make 300%, 250% return without me looking? And did you have to figure out where FedEx was going to go or trade earnings on it?
Nope.
Okay. Do you guys understand the power of time spreads? We sell them this option. So here's the rules. If implied volatility is at least twice as much, write it. Oh, you know what? Why don't I just write it down for you? Better way. If implied volatility on options that are expiring this week during earnings week is 2 times higher than implied volatility on options that expire the following week, and if historically, sorry, the move stays in range. Oh God, I can't type to save my life today. Stays in range 75% or more, we do a time spread. We sell this week's call and we buy next week's call. And if the move doesn't go, we make a lot of money. So you see how instead of spending $9, we only spent $2 and we have a chance to make unlimited amount of money? Because let me explain something to you. Let's say tomorrow's earnings comes out, this doesn't go anywhere, and next week this goes to 390. How much is this option going to be worth? $40, right? Matt, you spent $2 on the spread, right? And now you're at $40, right? So what do you guys think about that? Trading earnings, unlimited profit potential. Oh, but what's your risk? The $2. Your debit is your risk. Well, what if, Roger, you're not telling us the whole picture, because what if this goes against you? Yeah, you exercise both options. The one you're long, you get this one exercised against you. You have a full week to exercise your option. And since they're the same strike price, they cancel each other out for no debit. That, my friends, is how you trade earnings. But here's a catch. Here's a catch. Unless you have this tool that Matt's going to share with you right now.
I'm working on it.
I know you are. What other stock is having earnings tonight or tomorrow? Can anybody tell me?
CCL, MKC.
Oh, you mean this tells us the earnings that are coming up in the next 5 days, Matt?
Yep.
Wow. So an idiot like me doesn't even have to go anywhere to look?
Nope.
Isn't that interesting? Why don't you go ahead and click on CCL?
Can I click on it? I can't. I didn't know that.
It's calculating, it's crunching, it's pulling all the numbers. So it's telling us that implied volatility is how much higher right now, Matt?
Give it a second.
See, it's weak. It's only 1 times higher. But the success rate is 84%. So implied volatility is not high enough, but it stays within range. So we would have to skip that. How about MKC? Let's try that. Not good. Not all will be good, but FedEx was a good one.
What's also interesting, Roger, is you're able to basically compare multiple tickers at the same time.
Yes, yes. So thanks, Matt. Go ahead and unshare your screen. So to summarize this part of what we just showed you, still sharing. Oh, there you are. So here, to summarize really quickly, I just showed you a way to find the best ingredients for the perfect directional trade, including options. Then I showed you how to combine it with seasonality and automatically pull out the top stocks. And then I showed you the only way to trade earnings. And I also showed you how to make sure, hold on. I also showed you how to check for correlation to make sure you're not trading two stocks that are hyper related to each other. It's a pretty cool tool. Do we have any questions before I give you a lot of red meat and give you a real demonstration of Data Miner and show you all
Yes,
the goodies that it can do?
there are amazing the questions that are being asked. One thing was this, some people have some strategies where they like to buy, ahead of earnings, like a week ahead of earnings. And I think from your perspective, Roger, you might want to drill down on that. You wouldn't recommend that. My understanding is that you like to learn at an earnings date, and the day at the latest possible time is when you want to look at the time spread.
Yeah, because implied volatility will be the highest. That means I get the best deal.
Yep.
Yeah,
And
absolutely.
and that's important. That's
Yes.
extremely important. Other questions are this, Roger, are you looking to choose a delta closest to 50?
To do what?
We're looking at the time spreads,
Yeah, just add the money, whatever the money is, the
you
closest
know,
to the money.
closest to the
I
money.
don't look at deltas. I just look to see where the stock price is, the closest to that price.
Hmm.
And remember, you're selling and buying the same strike price, so you're not gonna lose $1 billion. Your risk is limited to what you pay for that debit. And the reason
Right.
you want to wait to the last minute because your debit's going to be lower, because the option you're selling is going to keep inflating as you get closer to the earnings. It's the only way to trade earnings, I promise you. And here's the problem. Good luck finding that information without Data Miner. And when I say that, I'm not being sarcastic. I'm really mean that. Good luck finding that data without Data Miner. You're not going to find that data. You're not going to find out how many times the expected move was higher or lower. We literally have to scrape that data to find it. Okay? Any other questions before we begin?
No, I think you've done a good job. Folks, I will repost the link to this cheat sheet that Roger created. And Roger, I'm glad that you did that because that's a wonderful way to have a companion document along with what you're talking about. So, folks, for those of you, this was a lot of great information for you to absorb. And the cool thing about this is that you can go ahead and get a replay of this presentation. I'll post that link here. And if you download the cheat sheet, you'll be able to follow along. So there's a link to Roger's YouTube channel where you can see a replay of today's VIP session. I'll copy the cheat sheet in a minute, but I want to let people know if you're following us on YouTube at this point in time, we're going to be stopping that stream. So if you'd like to come on over and join us for the rest of this presentation, you need to come into our Zoom room. And with that, Roger,